90% of all option retail traders within India are making losses. This is mainly because there is no feedback or analysis on the trades that they lose money. But you tell me, is it a good idea that the trader who made that trade in the first place should be the one analyzing those trades, because he obviously has his own biases? And that's exactly where Draconic comes in, because it is able to analyze and provide you an independent third-party analysis that shows you your hidden patterns as a trader, and if there is any consistent pattern that you're losing money because of that. And to showcase exactly that, I have a perfect trading setup. Today I booked a very small loss in deep out of the money put option in Nifty, and this on your screen is Draconic terminal, and I'm asking it a simple question: can you please bring up my trade for today? And it is going to tell me what exactly my position is, because I've already integrated it with my Zerodha broker. And that's exactly what makes it very powerful, because it is able to track your trades and help you understand what went good, what went bad, and how to plan for a better trade next time. Now, as you can see, it brought the information. The instrument that I was trading was Nifty 26th July expiry 21,500 put option, and I had taken a long position in it. And it told me what was the underlying index context. Now, your option was a play on downward pressure. However, Nifty established an immediate upward bias, opening near the absolute low of the day and advancing steadily. So here it tells me overall statement of the option, what exactly was it supposed to be, and it tells me what the execution assessment is. That is the brief overview of what it thinks about it and what is the forward-looking takeaway. Now, this is a brief summary. You can spend some time going in it, but there are some directed questions that I asked Draconic specifically to bring out some of the hidden layers that a trader often misses while analyzing the loss that he is making. For example, the very basic and the very obvious question that you can ask, and this is as direct as you can be, is: was the trade a bad trade or a valid losing trade? The assessment that it gave me is this was a valid losing trade from an execution standpoint, but a low probability entry from a structural perspective. So it says the choice of the option in itself and choosing this entry wasn't accurate. And it says to refine future execution, we have to separate the quality of your discipline, which was excellent by the way, from the quality of the setup, which was fighting a strong intraday tide. Let's see what it tells me further in detail. It looked at the 15-minute time frame of the Nifty chart during the morning of 24th, that is today, and the market structure was heavily stacked against a short position almost from the opening bell. So it tells me what was the zone, basis of the zone. Yesterday's major structural support, buyers defended the zone with high conviction. It also told me that there was a bullish fair value gap created and the momentum was consistently higher lows, and it deterministically tells me 3 distinct points why it was a valid loss. It was zero denial. I did not sit at the trade hoping for a reversal or average drawdown on a depreciating option. There was a strict risk containment. A loss of 0.65 per contract is a microscopic fraction of your standard risk tolerance, and it says clean execution. When the market proved your directional hypothesis wrong, you executed your exit plan at 10:34 without hesitation. And you see, there was no bashing over here that you are a bad trader or anything. And this is why it is very important, because if you go and look at your profit and loss statement about a month ago, 2 months ago, 3 months ago, often you would not be able to go into such depth that was it your discipline, was it your risk appetite, was it your directional sense of the market, or was it the position sizing that was wrong. But over here, the analysis that you see, this is recorded into history, and Draconic remembers it, and it keeps on evaluating your neural patterns, and it keeps on analyzing your trading patterns using AI to give you concrete thesis of how your trading journey has evolved and what are the patterns on the basis of which you usually trade. And if there is a recurring pattern where you keep on consistently losing the money, it highlights you that. But to bring out all that information, all you have to do is ask. Therefore, I will ask it, did I break discipline, or did the market simply not pay me? And it tells me I did not break any execution discipline. The market simply did not have the structural condition to pay a put option today. That's as fair as it can be. It's not about the market not paying me money, but it is often about me not being aligned with the market direction as a trader. And based on the history, Draconic remembers what my ideal risk positioning is, what is the risk tolerance that my portfolio 50 lakh, 55 lakh has, and stop execution, you cut the trade for a very small loss. Why the market didn't pay? This is the structural fiction. Now, if you are an intraday option trader, you would rather be interested in slightly different questions. For example, whether the move within the day lost the pace way too fast, or whether when I was entering, I was already too late to the trade, or whether the option or the participation layer was weak. For example, I wanted to buy a put option, but in the option chain analysis, the open interest or the volume, were not supporting that move. However, on the other hand, a swing trader or a positional trader would view the things slightly differently. They would ask Draconic whether the short-term time frame loss matters in the long term. Because, for example, the option expiry that we had was about 1 month after, that is the July end. And if I want a Draconic to analyze what kind of setup or behavior keeps hurting me, all I have to do is simply ask, and it will go back to all my trading history and try to analyze the pattern if there exists. So it says the out of the money cheap premium trap, which is selecting late July 21,500 put when the underlying spot was near 2,400, is a major mathematical headwind. And this is primarily because there is illusion of low risk, the reality of delta and theta. The underlying Nifty has to make massive immediate downward movement for just the option price to tick up significantly. The second point it tells me is, usually I try to take put option whenever I see a small high being formed. But until and unless there is a confirmation, it does not make a lot of sense for me to try to predict the highs or the tops of the markets. So in depth, it tells me buying puts during a high velocity upward drive doesn't make sense. Fighting the 15-minute trend when the EMAs are in perfect upward alignment of 8, 21 and 50 stack doesn't make sense for anyone to buy a very deep out of the money put option. And it also tells me what I need to do to change my behavior to become a better trader. There are very two simple concrete objective points. It tells me trade at the money or near the money options. That is much better for me. And it tells me structural invalidation. Never buy puts when Nifty is printing consecutive higher lows on 5 or 15-minute charts. Let the market prove the buyers are tired of waiting for a break of the previous swing low first. And this is what Draconic's memory in action looks like. It remembers what my risk profile is. It remembers what my position sizing is. It knows what I am allowing myself to risk per trade. It knows my capital, it knows my trading history, so it is able to evolve the neural patterns with my trading strategies and is able to give me concrete answers of what I need to improve in my trading strategy to become a better trader. So as you now understand, no matter what your trading psychology is, all you need to do is ask questions aligned to your trading strategy and Draconic will help you answer all those questions. But remember, at the end of the day, Draconic is helping me understand the trade, and over time it helps me understand my trading style, my trading loss patterns better than I could use in my earlier framework of simply going to my terminal and seeing my daily profit and loss. Because let's be real, what we did 1 month ago, it's almost impossible for us to remember. But for an AI based platform that is very smart and remembers all the trading history, it's much easier for it to find the neural patterns in my trading psychology.